Let's get in some fundamental views. Then we have Amnish Aggarwal, Director Institutional Research at PL Capital, joins us. Hi, Amnish. Thanks a lot for joining in. Amnish, I wanted to ask you about DMart. The margins are a bit of a shocker, actually, and they missed EBITDA estimates by quite a large deal. What's your view on the stock?
See, we have been very cautious on DMart from quite some time because the competition in the overall food and grocery retailing is increasing, as is reflected in the stance of many of these quick commerce players. And I think over the next 6 to 12 months, we see further increase in the competition over there. The second is whatever they had lost on your general merchandise and apparel. I think that share, if they are able to hold it static, that would be a great achievement, because today even the quick commerce companies are now going on the, you can say, non-apparel general merchandise stuff. This coupled with, you can say, the increase in the labor cost, increase overheads due to store opening, I think that is all putting a pressure on the margins. So how far it has played out in the current year is yet to be seen, and I believe, and I don't rule out that there could be a little bit of more margin compression as we go into the next year. So I think from the current levels, while we might see some recovery in the profit growth, because from the last 2 years, the EPS growth has been hardly 5-6%, but definitely not a clear upside or not a very clear visibility at this point of time.
Amnish, hi, morning. Let's get your take on both the banks, SBI and Kotak Mahindra, because while the present quarter has been pretty good for most, SBI, it seems that the write-offs have aided the asset quality, and more importantly, I think growth is becoming a bit of a concern. I've seen some notes on Kotak as well, downsizing their overall expectations because of the growth parameters slowing down a bit. Your thoughts?
You see, if you look at Kotak, not now, from the past few years, the problem with Kotak Mahindra Bank has been the slow loan growth. Okay, so intermittently from past couple of quarters that had improved. But if you look at this quarter again, first of all, the growth rates are not encouraging. Secondly, even there is a bit of NIM compression also. And the third is your provisions have gone up. You can say partly because they have also increased the provision coverage ratio. So I think in the current year now, if you look at in this backdrop where the interest rates are going to come down, and Kotak is, for example, if you look at your benchmark rates, I think there is going to be a pressure on earnings for banks in general in the current year because of the NIM compression which is likely to be there. So in terms of earnings, I think the things are not looking that great, but simply because the sector has been an underperformer relatively. The valuations were on the lower side relative to what we have seen in the past few years. We have seen you can say, rally in financials. And I think in the near term, looking at the numbers, for example, you look at, say, even your SBI, the loan growths are not encouraging. Your LDR, yes, it has, you can say, improved a little bit. But I see very little probability of any major upside coming in some of these stocks, because even in case of banks, I think where the numbers visibility is more strong and where I think the things are looking far better in terms of growth, I think the people will flock to those. And on a relative basis, I think banks like, you can say, an ICICI might look better than Kotak at this point of time.
Stocks. In just a bit, we'll also have Lata joining in. And JSW Steel obviously is going to be a stock that continues to be in focus given the events that transpired on Friday. Nigel, I don't know, you might have gone through more notes that came over the weekend. Is the worst of it already perhaps priced in now? Or what else did you come across?
Well, a lot of the sell-side notes, they believe that maybe, in fact, with that 6% cut, those that are underweight on the sector as well as on the stock, they believe that maybe most of the bad news is priced in. But Amnish, what do you all think at PL Capital? JSW Steel, valuation-wise, it never has been cheap, but it always gets that premium because you'll get growth. Now, that growth may not be as much as expected if in case Bhushan Power and Steel asset, doesn't ramp up as much. Stock was down 6% in Friday's trading session. It's showing another downtick of around 1.5% in pre-open. Most of the bad news in the price?
It is very difficult to say in the near term, but definitely it is going to put brakes on growth of the company. Okay. And moreover, I think it is not only JSW, there will be now question marks on whosoever has purchased assets under the NCLT resolutions. So I think the full impact is yet to play out. I think over the next, say, few days or months, we will get more clarity on that. But definitely in the near term, we believe that the stock may now remain slightly weak to range bound till the time we get more clarity on how the things are going to be, what is the exact impact and how they are going to counter it.
Amnish is with us. Amnish, just a quick word on Reliance Industries, if you will. And actually, two sets of questions. One is RIL, which is up about 9% last week, saw signs of life. And the other is defense. You know, Mazgaon Dock, Garden Reach, you had Data Patterns, and a bunch of others, which were all up 15% and more Friday to Friday. That is the last week. So Reliance and these defense names.
Okay, so Prashant, two things. First on Reliance, you see the stock, if you look at last year and a half, or rather 2 years, it has not gone anywhere. So that is one. Secondly, if you look at the various segments in which they are operating, now, for example, Jio, I think the outlook looks fairly decent even going forward. ARPUs might further increase, and people are also expecting some sort of, you can say, tariff increase to happen, maybe towards the latter half of the year. In retail also, we might have already seen the worst in terms of numbers, and the numbers can actually see some sort of a gradual improvement from there. In some of the other segments, say for example, your petrochemicals and all, I think your prices are going to improve, and they might also get some benefit from the crude, which is now softening. But I think one big delta which can come in from Reliance is that no one is ascribing today any value to their new energy initiatives. And they have also, now they have started giving you some hint of where there you can say your solar, this photovoltaic, this entire initiative goes, how many gigawatts of power they are going to generate, and then green hydrogen and all. So there is likely to be more clarity now as we go along, because I think 1 gigawatt is something which they are very close to commissioning now. I think all these actually makes Reliance more or less, I think the stock bottomed out. It is now trading at, I think, still lower than what it used to trade a couple of years back. So I think Reliance from here on also can give you reasonable returns if you look at in the next 6 to 12 months. Now looking at the...
All right, Amnish, thanks very much for that. Just